For those of us who are Tesla bulls and want to know how many shares it will take to retire and be drinking Mai Tais in Honolulu by 2030, Gary Black has projected the price of Tesla to that point. For all of us Tesla bulls, Gary's material is a great eye-opener, and the more you study his model, the more unbelievable things become. I'll explain in this video why Gary's model is far too cautious, and despite its initial seeming optimism, doesn't fully account for Tesla's potential. Retiring will require fewer shares than what his model suggests. See why Tesla will, in fact, quadruple Gary's predictions when you tune in. Bear in mind the following critical parameters as we review 1. Price of Tesla shares, 2. Rate of Tesla deliveries, and 3. Rate of EV adoption. These measures are what Gary looks at when he makes forecasts. First, let's focus on the larger picture, the price of Tesla's stock. Let us now examine the second indicator, which is the annual delivery rate. Gary projects that by 2030, Tesla will have tripled its current yearly supply rate to 10.8 million vehicles shipped annually. As most of us are aware, Tesla has the capacity to easily quadruple its current delivery rate of 10.8 million units by 2030, therefore this estimate is actually rather cautious. Let's now discuss the most important component, the rate of EV adoption. By 2030, what percentage of the car market will be made up of EVs? From 3.4% in 2021 to 10% in 2022, then 16% in 2023, 24% in 2020, 24%, and 2034%, and so on until 2030, when it will reach 60%, is Gary's forecast for EV adoption. Put another way, he projects that there will be 54 million electric cars on the road globally by 2030. Additionally, he predicts that 20% of the 54 million EVs will be Tesla vehicles. Throughout his forecast, Tesla's 20% market share for electric vehicles is a recurring theme, with the number staying steady between 2024 and 2030. I get the impression, though, that Elon is hoping to gain far more sway over the market than his 20% share by 2030. Like many other Tesla supporters, I concur with him. I'm sure there will be more rival brands along the future, but when it comes to modern EVs, none compare to Tesla. Gary is once again playing things quite cautiously. Instead, I'd estimate Tesla's market share to be between 40% and 50%. I believe that Gary Black's projection is somewhat inaccurate and overly optimistic, as he believes the average price of a Tesla will be $65,000. I understand that inflation may alter our expectations about what constitutes a fair price for a car, but I believe Elon is genuinely attempting to reach to a wider demographic, which includes middle-class consumers who are ready to spend no more than $40,000 on a car. Gary has high expectations for Tesla's gross margins in 2030, projecting a figure of 32.8%. This is quite effective, and hopefully he's not mistaken. Now let's discuss why some of Gary's presumptions are overly cautious. His model's primary flaw is that it solely takes Tesla's car manufacturing into account. The fact that Tesla is actively working on clean energy, robo-taxis, Tesla bots, and Tesla insurance cannot be explained. Given the limited number of cars he is estimating, he is conservative in his projections, but his 47% annual growth rate is still amazing. You may have observed that the PE ranges from 61.2 in 2022 to 6.4 in 2023, reflecting a Tesla price of $269. He isn't forecasting that this will be the PE in 2030, of course. I don't think a 6.4 PE in 2030 is feasible, but his $269 Tesla pricing reflects that. Assume that by 2030, Tesla's stock is trading at $269 and the company is making $42 per share. At that point, the price-to-earnings ratio might approach 6.4. That's the method he's using. Later on, we'll explain or make educated guesses about the stock price based on his chart. The final point I want to make with Gary's model is that he projects very good yearly growth rates for both EV adoption and deliveries minus 44% and 45%, respectively. Now let's use Gary's model as the foundation for our own analysis. Gary's model, as we have stated, solely takes into account cars. Between 2022 and 2030, the expected range for Tesla shares is $269 to $270 to $270 per share, which is utterly ludicrous. The model's prediction that Tesla will have 3.1 billion shares outstanding in 2023, a 14% increase, and 3.6 billion shares outstanding by 2030, the conclusion of Gary's projection, is another ridiculous aspect of it. The strategy of stock dilution is illogical, and I believe a significant repurchase is imminent, which would lead Tesla to issue fewer shares rather than more. It's just not adding up. It is ludicrous if Tesla still has to dilute in 2030 while generating over $200 billion in net profits. Better still, they should be granting buybacks than diluting. However, we have to remember that this is just a prediction, and it appears that Gary Black is being cautious. We can observe that the market cap continues to rise while the stock price remains constant. This is likely due to the fact that the individual solely included automobiles in his model, which supports the outstanding shares and dilution argument. Let's expand on our discussion of the stock price. Again, the stock price in 2030 is $269, but only as a result of his novel approach of calculating PE. Black's projections about the stock price begin to make sense when a reasonable PE is used. For instance, Gary's model produces $552 per share for 2023 when utilizing a 69 PE, which makes reasonable given Tesla's $1.9 trillion market capitalization. Put differently, Gary Black estimates that the company might trade at a price target in 6 to 12 months. That is more than 3 times the firm's present trading price. At a 69 PE in 2023, this isn't too bad. So $632 a share in 2024 seems like a decent deal, doesn't it? Here we are in 2025. The one factor to consider while analyzing the 2025 share price is that because to Gary, Tesla's earnings have increased by $20 billion year over year from $46 billion to $66 billion to $66 billion in just 1 year. Amazing. Let's go on to 2026 now. I'm going to assign it a P of 40, which would result in a stock price of $832 a share. In 3 years, an amazing 4x or 4.5x increase. And that is solely based on automobiles. Once more, the goal of all these computations is to remain cautious. Let's put FSD on top of this to make it a little more realistic and bullish in my perspective. According to the study, FSD sales above $2.5 billion with a 48% profit margin will increase by 2% a year. Therefore, based on that figure, we will forecast that the FSD profit margin will exceed $1.2 billion in this chart. The net income will increase by an additional $2 billion to $15 billion, or $303 per share with a P of 61. Therefore, the stock price might rise significantly with FSD added $625 in 2023, $729 in 2024, $834 in 2025, and $972 in 2026. The company's stock price will reach $1,282 in 2030, and its market capitalization will be close to $6 trillion. This is when things really get insane. Yes, folks, we have already left. From $10, $15, $20, and $30 per share in car value alone, plus we're getting an additional $230 because of FSD. Yes, that sounds wonderful, but there's more. By 2030, if the current price of Tesla stock at the time of recording stays at its current range of $133.42, you will have experienced an incredible tenfold growth. I'm not sure about you, but I find the thought of buying all the Tesla stock appealing. Guys, knowing this makes the Mai Tais and Maui look much more authentic. Again, these are only forecasts, and nothing in the world of investing is certain, but overall, I think it looks promising. Gary Black projected $550 per share over the next 6 to 12 months, based on a PE of 69 in 2023. Let's see if this comes to pass. This market is awful as a market. In another 6 months, things might get better and we might hit $500 or $412. However, this is comparatively low when compared to $550. Let's now review. Assuming a price-to-earnings ratio of 25, the market capitalization of cars is predicted to surpass $1,000 per share by 2030, representing a fourfold increase from its current level. By 2030, we increased the share price by $230 and included 30 FSD. Additionally, we included robo-taxis and Tesla insurance. Though it's been a while, hopefully this was very educational. How does Gary Black's analysis sit with you? Do you think it makes sense? Tell us in the space provided for comments. We appreciate your time, and we'll see you in the upcoming video.